Hey, it's Clay at claytrader.com. This will be my top 10 stocks as we head into Friday, September 5th. This will be a technical analysis breakdown, so if you are someone that uses charts within your trading, or maybe you're just interested in learning more about charts and how they can be used as a tool to help make good decisions as a trader, this will be a video for you. First off, a couple clarifications. Number one, the candlestick that you see right there will be moving around and changing. That is because the market's still open for a small amount of time. But I like to do these videos when the market is still open because sometimes we can capture some really interesting late day price movement. Second, I'll be using the 30-minute time frame, meaning each one of these candlesticks here represents 30 minutes worth of time. So ticker symbol number one, we are looking at OPEN. Very nice move on this one. If you watched yesterday's video, hopefully remember me talking about this pattern here that I drew, but you can see opening 30 minutes, came up there, broke through the pattern, had a little bit of a pullback right here, and then from there just got beautiful continuation. So overall, very nice day. I'm going to go ahead and get rid of both these lines here as they serve their purpose for now. But moving forward now, let's map out a couple of the two key levels. So first level is what I would call the ideal level of support. When you say, hey Clay, what would make this chart look the absolute strongest moving forward? And that would be if the price could stay up here above $5.70. Now, don't get me wrong. If the price falls below $5.70, that doesn't mean the entire chart's destroyed or ruined or anything like that. But yeah, if the price could stay above there, that would be a very impressive sign of strength. Taking a step back, though, and looking at things from the bigger picture point of view, that is where the purple line comes down into play, the 50-period simple moving average. Keyword being moving, because I understand the price is way up here, this line's way down here. But as time goes by, that line's going to move itself higher and higher and get more and more relevant. But from the overarching viewpoint, as long as the price stays above that purple line, then that does imply that the overall trend is in the bull's favor. So again, preferably speaking, stay above 570. But from the overarching standpoint, as long as the price stays above that purple line, the bulls 100% own the chart. In terms of areas of resistance, no need to overcomplicate this. Just ask a very basic question. Where did the party finally stop today? And that was right up there at about 608. So no fancy logic there at all, other than just that's where the party stopped today. So keep an eye on 608. But anyway, look at it. Very, very impressive movement today. Next one here, CIGL. And overall, pretty crazy day. And now things have consolidated out and created a nice little pattern. But, if you were someone that bought up, there we go. Bought up around that area. Well, then, yeah, nothing I say here is going to really sound bullish to you. So I'm assuming you weren't some sort of day trader that bought up around that area. But with the pullback here, and then more importantly, how it's now stabilized out, it becomes a little bit more, credible to suggest that maybe, just maybe, the downwards move is over, and maybe, just maybe, this thing wants to try to head back upwards. So if there is going to be any sort of potential curl back upwards, in my mind, that resistance line right there is a very important spot. And then on the flip side of things, just very basic logic here. If this is some sort of bottom and the price has stopped pulling back, well, you want to see it stop pulling back. And the line in the sand seems to be right there at $2.60. So as long as the price chops around here sideways, again, sideways does not guarantee that for sure the pullback is over, but it just makes it at least a plausible suggestion to throw out there. But if the price crashes down through 260, well, then at that point, it no longer makes sense to say, hey, maybe the price is bottoming out because, well, by definition, it hasn't bottomed out. It's broken down through new lows. So keep a close eye on 260, but right now, it's going sideways. Is it going to curl back upwards? We'll see what happens on Friday. Next one here, INHD, and we have ourselves a very, very solid pattern here that has formed this afternoon. So let's get this pattern into play. So top of the pattern, we have that resistance area right there. Bottom of the pattern, we have this area of support right there. Let me change that to green. And then just to make the pattern easier to see, let's keep it all the same color. So we have our resistance, we have our support, we have the explosive move right there. And then if you golfers out there try to make it more visual, put the golf hole down here. This would be a bull pennant pattern. Now, just because something's a bullish pattern does not mean that for sure guaranteed that if the price comes around here and then breaks out, it's going to make a big move up. My point here, is it valid? Is it reasonable to throw out the question that, hey, you know what? A break of that level could create additional buying pressure. That is certainly a valid question to throw out there as a possibility. So if you like this price range, you like bull pennants, keep an eye on it. Next one here, BBLG. Now think back to the second one we talked about, which was CIGL, and how that one started off strong, came down, and then started to go sideways, and then it was more a question of, can it curl back upwards? Well, all of that has essentially kind of already happened here. It's gone down, it's gone sideways, but in this situation, if I draw this trend line, you can see, so think back again, CIGL, that trend line still hadn't been broken. In this situation, it has. So now that does prompt a very interesting question, and that is this. Is this the start of something even bigger? Now think about that question. It makes no sense to ask that question if nothing worthwhile has even happened. But in this situation, something worthwhile has happened. It's leveled out and it's broken that level. So again, does that guarantee it? No, maybe this is just a fake breakout. Maybe it goes right back down. But to be fair, maybe this is the start of something even bigger. But that's the whole point of when you get to ask those questions, it does become a very interesting situation. So it has been broken. Now it's just a question of, is this movement going to pick up more momentum on Friday? We'll see what happens. Next one here, NVDA. And if you've been watching past videos, then you know that from the overarching standpoint, nothing has happened. What do I mean by that? Well, overarching, I've been talking about this sideways channel pattern. Bottom of the channel support down here at 167.20. Top of the channel resistance up there at 172.60. But within the channel, we're now at actually a very interesting spot. And that is the price you can see has come right to that purple line, which is the 50 period moving average, right now valued at 171.10. So now going into Friday, can the price actually break above there? Now, even if it does, that is a step in the right direction, don't get me wrong. But stepping it back and now looking at the bigger picture, still work that needs to be done because the price would still have to break through the top part of the channel. But again, that would be a step in the right direction. Now, if the price gets rejected, is that the end of the world? It's not, because again, from a bigger picture, the price is still well up above the bottom part of the sideways channel, down here at 167.20. But overall, the price is knocking on the door of that 50 period moving average. Can it get the break? Grab your popcorn for Friday. Real quick, want to pause and help you solve a very common problem that maybe you're suffering under right now, and that is the fact that you would like to be a day trader, being defined as having unlimited day trades every single day, but you can't because you're trapped under the pattern day trading rule. If that describes your situation, then just know that there is a way to get unlimited day trades in a market that trades even quicker than penny stocks and small caps, and it's what I've been doing. So if you are interested, check out the link, or if you're totally skeptical, like, I don't know, Clay, this sounds a little bit too good to be true, totally understand. That's why I'm inviting you. Come check out the live stream. I live stream every day starting at 11 a.m. and then I go for a couple hours, and you can come see it right before your very eyes. Ask me questions if you want. But yes, if you would like to be a day trader, but you can't because of that stupid pattern day trader rule, then definitely check out the link. Or if you're skeptical, then just swing by the live stream, see it for yourself, ask me some questions. Next one here, looking at AEO, and we have a pretty well-defined pattern here. So let's just get this pattern in place. So we have the resistance part of the pattern. And right here we have the support part. And this would be a rising wedge pattern, which is actually a bearish pattern. Now, earlier in the video, I talked about how just because something's a bullish pattern does not mean for sure the price is going to go up. Same is true here. Just because this is a bearish pattern does not mean for sure the price is going to go down. But would it be shocking if the price gets rejected from here and then goes on a bit of a pullback? I don't think anybody would be shocked by that. Again, not guaranteed to happen, but given the nature of the pattern here, the rising wedge, if I were pushing to a corner, I would expect more of a pullback before any sort of more significant moves in the upwards direction. But like I said, just because it's bearish doesn't mean it's guaranteed to go down. But in a nutshell, AEO here looking at a rising wedge bearish pattern. Next one, SOUN, and taking a look here, I think we can very much so just summarize this with a couple of key levels that you got to think a lot of people are watching and probably drawing. So the first area to watch is going to be that resistance level right there. Again, got to think a lot of people have drawn these areas, and when a lot of people have drawn the same areas and are wondering the same things, call it a self-fulfilling prophecy, call it whatever you want. It can produce some very dynamic movements. So I think that's what we have right here, a trend line that a lot of people have drawn. Same with down here. I think a lot of people have probably grabbed that low and then connected to that one, and they're now watching this as a support area. So we have our key overarching area of resistance here, our key overarching area of support right here. And now it just becomes a question of, as it battles back and forth, who is ultimately going to win this battle? Do the bulls win with a break to the upside? Do the bears win with a break to the downside? That is the question moving forward. But in terms of just kind of the overall wedge, the overall pattern that has formed, I think those are the trend lines that most people have drawn. Therefore, it doesn't necessarily guarantee anything, but helps you kind of gauge what most people are probably watching and wondering about. Next one here, DLTH, nice pattern, and it's sort of along the lines of some of these other ones that we've talked about, where there's been these big movements, then there's been a bit of a pullback, and then the price consolidates out and suggests that maybe just maybe the pullback is over, and maybe just maybe the price is going to try to curl back upwards, and that's what we have here. So I think a very straightforward area to watch from a resistance standpoint is going to be that level right there, so keep a close eye on that. And then in terms of the area that you would just simply want to see hold, because going back to that logic of, well, if this is some sort of bottom, this is kind of the end of where the pullback has happened, well, then you don't want to see the price drop lower than that area, because that would defeat, that'd be self-defeating logic. And that's what we have here with that trend line right there. Now, if it breaks below that level, I'm not going to say the chart's destroyed and it's going down there to fill that gap. But what I am saying is that the current argument right now that could be made of, okay, I think the pullback is over, and I think something like that could happen, is still completely in play. So yes, nice surge, got a bit of a pullback. Now we have this nice little wedge. Will it lead to a push back to the upside on Friday? We'll see what happens. Next one here is ZNB, a total train wreck of a chart. Very, very ugly. But you longer time viewers know what I'm going to say next. There can be opportunity in the ugly. But I mean, you stop and think about big gap up, price came up here, and then just a total collapse. So I hope day traders and people are using stop losses. But now we have to look at where the price has worked its way all the way back down to. And that is these lows, I take that back, almost these lows right here. Now, I'm not saying there's guarantees, but the last time the price was down around this area, you did get a bit of an upwards movement. So after this big pullback here, do you get something like this? Again, that doesn't necessarily go that explosive, but even a little bit relative to what would be in risk, you could be looking at a nice risk versus reward scenario. So on that note, if you can't be disciplined, if you can't honor, stop losses, I mean, you shouldn't even be trading anyways, but you definitely shouldn't be trading these situations because, yeah, there is certainly some danger here. If this does continue to collapse, you don't want to turn yourself into a bag holder. But again, that's where the risk management and discipline comes into play. But from a risk reward scenario, if the price just gets a little bit more ugly, does that create an opportunity where even if it gets a little bit of a modest bounce, what was being risked relative to what the potential bounce could be might be a nice little risk versus reward scenario. So if you like these sorts of circumstances, certainly keep an eye on it. Next one here, TSLA Tesla. Not only a good solid day, but really the good solid day is coming in this latter part of the day where the price came up here, got the break, and now during the last 30 minutes, and like I said, that's why I like to do these when the markets are still open, you're seeing this thing is currently pushing to new highs. So overall, good solid day here for Tesla, and we'll see if it can build upon this momentum moving in to next week. And I think the level here that a lot of people probably going to be watching, I don't know that for sure, but that does seem like a very basic and quite frankly, a very quality trend line. I mean, check this out. By just connecting that low with that low, it forecasted that bounce in that pounds point area. So this seems to be a pretty credible trend line here. So let me change that to green to represent support. And then to make it look a little bit different, we'll just add that right there. Because yes, overall, all 326.40 remains the key area of support. But preferably speaking, moving forward, what's going to make Tesla look the healthiest and strongest moving forward is going to be if it can stay above that trend line right there. In terms of the next key battleground to watch now moving into Friday, right up here around 342.50, which is just simply where the congestion showed up a couple days ago and where the price ultimately got smacked back down. But yeah, all in all, nice movement. Check it out as I continue to speak. This thing continues to press new highs here. So overall, let's see if this momentum carries into Friday. So that wraps up the top 10 list. Again, if you are suffering, if you are annoyed by the pattern day trading rule and you want to become a day trader, and quite frankly, you want to day trade in a market that moves even better than penny stocks and small caps, then definitely check out the link that you've seen at the top of the screen the entire time, or swing by the live stream, watch it with your very own eyes, ask me some questions, because this is something that very little capital is required, yet you become a day trader, you get access to an amazing market, and it's something that a lot of people are doing and I think makes a lot of mathematical sense from just a risk management perspective. So like I said, if you want to learn more, check out the link, or if you're just totally still skeptical, I understand, swing by the live stream and you can ask me questions. So make sure you subscribe and turn on notifications so that you can be reminded of when I do go live. So thanks for watching. Make sure you hit that like button and hopefully I'll see you on the live stream.